our target audience, you guys are invested as well. It's been a roller coaster, right? I've had heart attacks. I was really happy one day. Anthony, what are your thoughts?
I don't know. I think maybe just to take a step back and take stock, right? We look at the major indices. S&P is down 2% in a month. Nasdaq's down 4.5, 4.7, I think. Nasdaq 100, so mega cap is down 3. And then we look at the smaller ones, the growth stocks. Your Russell 2000 is down 9.7 in a month. Russell 2000 growth is down nearly 12. ARK, Katie Wood must be sad. Not really, she has fees, but ARK is down 23% in a month, 11% just in the last
These
week
are the
alone.
ETFs, yeah?
Yeah, these are all ETFs, right? This is not a single stock. We're not
Yes.
talking about DocuSign dropping 40% post earnings.
Not yet, anyways.
These are index with these are ETFs with 2,000 shared stocks in them, and they are down nearly 10% or more a month, right? It's a bloodbath. And yeah, for those that think that Bitcoin is negatively correlated, I have news for you. They dropped 20% last month. So yeah, it feels risk off to me, right? Generally, but what are your thoughts?
Yeah, definitely. Why don't you explain to us what risk off is?
Oh, sorry. But just risk off to me just means people don't like risky assets anymore. So not. I mean, if you think about it, equities are risky compared to bonds, yes. But even within the equity space, buying something like Amplitude or Rivian is intrinsically more risky than buying Apple or Facebook or Amazon, right? It's just size and the maturity of their business.
Yep. Gotcha. Cool, man. Firstly, thanks for naming your book. I think that's quite, quite
No, I have indexes, but not DocuSign, thankfully.
Okay. Got you. I mean, yeah, on my side, just before we jump into understanding a little bit more about what's exactly happening, it's a little scary, right? I mean, you think you've done your research, you've looked at your price sales ratio, you've looked at the books, fundamentally they look okay. You've been making money the last 6 months, and then all of a sudden, bam, in a matter of 2 weeks, it's wiped out, right? Effectively, unless you've gone in maybe in early 2020 when COVID was just starting, maybe you're still on positive. But if you've gone in just in the last quarter or even in the last 2 quarters, it's down hard. So it is quite scary for everyone, including myself. And that's why we thought we would discuss this a little bit more, right? And it's, I think, Anthony, for me, when we're looking at these markets, and I'm quite heavy in tech. I cannot say that I am diversified. I don't have ETFs like yourself. I don't have indices. I'm quite heavy in tech and not even big tech, right? So we've got the works of HubSpot, for example. We've got the works of Amplitude. You name it, right? Those smaller stocks that you think would be growth stocks. Those are the ones I'm invested in, and that's honestly quite painful. How have you been doing it?
It's been painful, I think. But to me, this is a good thing, right? Look, I think again, zooming super big picture, we are young, right? We are not retiring next year. We are still in our phase where we are accumulating more and more. And honestly, if we could choose between having a downturn now and having a boom market when we retire and need the money, versus having a boom market now, but if it falling 50% just before I retire, I'm choosing this, right? All the time. So, I mean, from that perspective, and I think that's the right perspective that people our age should take. We are accumulating. I think it's great opportunities. It's maybe a bit of a step back to take stock. If you have profits, take profits. If you have losses, think about cutting them. I haven't, but yeah, it's not necessarily a bad thing. It feels painful, but it's one of those things that will make it better over time. I would say.
Yes, and I think we all shocked at least in this last couple of weeks. But I think one thing to note is that major indices are still up from year to date, right? So if you take a look at January 2021, right now until 7th December 2021, we're still up. So I think that's some good comfort there that we can take. So if you are in from January, you're okay. Except that obviously, if you look at a shorter time frame and you just invested, say, after the last earnings call, where we had our session about 3-4 weeks ago, it's a bit negative there. One thing though that I am doing, right, in my strategy is that I'm honestly not even looking at the stocks right now. It's quite painful to look at my portfolio, but instead what I do is on my phone I have the regular stocks, and if it goes to a lower level, I actually put in a bid to buy again, right? Effectively DCA or dollar cost averaging. And I think for myself, what I'm relying myself on is that, yes, I have done my research. The numbers in the stock market does not reflect what is going on in the day-to-day business of the company. And I think that's really, really important to say and to do that, right? Of course, last week we talked a bit about Omicron, and this could be the reason why. And it's an external
No,
factor.
man,
So I think
that's
believing in
that.
external factor.
I'm sorry. I think that's just media narrative. It's rubbish. If
Yeah.
it was Omicron, you would see your Zooms and your Pelotons zoom back up, for lack of a better word.
Mm,
So I think that's partially a media narrative. Maybe it's tapering of the Fed, because they have because Powell doesn't like the word transitory anymore, and thinks inflation is here to stay. That could, I think, it be a slightly more logical reason to me. I can see a cause and effect
true.
link there, but yeah,
But I
you
disagree, right? Media narrative holds a big point in each of our hearts. If the media says something, more often than not, people believe it. And if the people
yeah,
believe it, they
it's
might, right? So they might
it's just media
feel
narrative that doesn't make sense.
okay,
If we
yeah.
think about it a bit more. Yeah.
Correct.
It's
Yeah. So
important,
it
yes,
doesn't
right?
mm,
We like patterns, we like stories, but if you think about it slightly harder, I honestly don't think it makes sense for this instance, right? Sometimes they're right. This is one time I disagree with.
got it. I mean, and when you look at these things, right? So as we look at the different stocks going through, so on and so forth, where do you think we could be, right? So as you mentioned, or as I mentioned, I'm doing DCA. What are you doing as well, Anthony? What are your plays here?
Yeah, so I think maybe just circle back a bit, right? We talked about buying indexes, and if you look at it, the S&P hasn't really dropped, right? It's down 2%.
Two
That
percent.
that's a
Yeah.
broad-based index. QQQ big tech hasn't really dropped. I think the pain has been in a lot of what we own of smaller growthier tech stocks, right? It's not in your Fangs or Mangas or Mamatans or whatever the acronym is now. We'll talk about it later. It's the big tech is okay, right? They are the safe haven now, and that to me, I see it again as a bit of a risk off narrative. People don't like your small 60 70 price to sales stocks now. They go to Google,
Mm,
and yeah, I'm paying 20% price sales, right? And it's fantastic, and that's safe. So if I were to bet, right, I think, and if I'm right, and we are going into a lot more of a risk off mode, big tech is the next to be hit, right? It cannot be that they are the only ones spared from a market downturn. If sentiment turns, it turns against the entire market. That's what has happened. That's what happened in the last taper tantrum. It's not. I mean, it's not always exactly the same, but I think it's instructive in a sense. So, for me, what I've done, I have taken out quite a bit of cash. I had a lot of cash to begin with because I found everything expensive. So
right.
that's not been too bad. I'm in
So you
Singapore,
said
SIU.
you took out some cash. Did you
Yep.
effectively make a loss in that? Were you still on a gain? How did that work?
Yeah. So
You cut your
I
losses?
mean, there were some that I had profits, so I just took profits of them. I redeployed some of it into things that I felt had been beaten down too much, like Zoom, as we talked about last week.
Yeah.
So yeah, it's I think a bit of taking a bit of money off the table, being less exposed. I have put quite a bit more money into Singapore dividend shares, right? So I always get cash flow. I have stability in terms of beating inflation. At least it was inflation in Singapore was at 4%. That's lower than my dividend
Mm,
yield. I'm relatively safe there. That's like 60-70% of my portfolio. I started buying a bit more, big tech index. So I bought QQQ just as a buffer again for the next few months
yeah.
while it bleeds. The only thing I think I haven't done, which I was contemplating last night, was to short something, right? It literally getting a
Right.
hedge onto small growth stocks. And I mean, look, we think about shorting as, oh yeah, this is difficult, we need derivatives. Actually, you might not, right? So I looked at my portfolio. It looks quite a bit like the ARK ETF, which is
Right.
why I brought it as a comparison, right? And there's actually this ticker called SARK, SARK, which is short arc,
Hmm.
right? And you can long it
Oh,
and it effectively shorts arc. So
so
that if you want to,
interesting.
yeah. So
So
if
you don't
you
actually
think
have
that
to go in
yeah,
to buy derivatives. You can actually
no, you
just
don't.
long this
You
ETF.
yes,
Is it an
I mean
ETF?
that
Yeah.
yes, it's an ETF. There's some technical things about like decay and all that, but I think if you're shorting for a month or two, it doesn't take too much off, right? So possible. I was
Hmm.
thinking about it. I was like, oh yeah, well, it's a small part of the portfolio. This is too much hassle. I'm not going to do it. But I mean, I think for the stock pickers out there, if you know your stocks, you have confidence in them, but you want to kind of remove yourself from the momentum, right? That might be
Mm.
the play to go. So yeah, something to think about.
Yeah, definitely interesting, right? I think for me, it's also the fact that there's been a lot of liquidity in the market, right? And I'm going to throw you another spanner here, Anthony, and I want you to hear your thoughts. I want to hear your thoughts on this. It'll be coming to, yes, we've got the Omicron, we've got people that are a little volatile, a bit worried, but also Christmas seasons, right?
Mhm.
Christmas season is
Santa
coming up.
rally.
The the expenditure of your you probably meeting your families after 2 years. On my Instagram, at least every other day, it's somebody that says, hey, I'm back home after 2.5 years. I brought lots of presents for everyone. So that's also something to think about, right? What are your thoughts in the fact that, you know what, I've made some money, I want to spend it a little bit and take the money out and see what I can do with that.
Yeah, I think that's a bit of that's a continuation of a trend, right? After if you look at the months, I think July to September, we saw huge increases in consumer spending in the US,
Mm.
attributed again by the media to the end of lockdowns and revenge spending, right? You see that in the US, you see that in China. It's the same. They seem they've got their story straight this time, and I kind of see why, right? Because I spent a lot on during after lockdown too, and I think anecdotally, you want to get to a Michelin star restaurant now, be prepared to book a month or two in advance, right? It's
Right.
insane how people want to spend money. So I think that it makes sense. I don't know how much it affects. I think look, it'll affect your retailers, right? To the extent that it pulls forward some demand. But is it going to be that great an impact? Is it, or do we just account it
Mm.
as a one-off seasonal thing? I think it really depends on the company and what they're selling. Yeah.
Got it. Got it. No, interesting. And I think it's something that, for coconuts out there is something to think about. Of course, I believe there is a Fed ruling coming out mid-December as well to see how that will be, if they are going to increase the rates and so on and so forth. Cool. I think I do want to talk about one more thing. Is
Mhm.
that, do you think that these corporations, these growth stocks, would it be a good time for them to, like, for example, buy back some of these stocks because it's of decent value right now?
Yeah, I think. I mean, look, the to me the reality is in if if you're a US listed company, you are growth share. You don't ever do dividends, right? It's tax
Mm.
inefficient. It sends the wrong signal. All you do is share buybacks. It's a form of returning. I mean, they serve the same purpose. They're returning capital to investors. It's just, I guess, there's a slightly different tax treatment there and a different market perception. So I think we can look out for it. And more than share buybacks, I think we can look out for more insider buying. Sorry,
Mm.
if we start seeing, well, not Elon Musk because he's just exercises options, but and not Satya because he sold 50% of his stake in Microsoft. But I mean, if you see Jensen Huang buying Nvidia hand over fist, I think that's a sign, right?
Mm.
And insider buying tends to be a relatively decent indicator. So that might be a sign actually if you're looking at individual companies where the CEO starts buying back shares and you go, oh yeah, maybe it's slightly oversold. The market has thrown the baby out with the bathwater, right? They wanted to sell, everything got sold off, but this is a good company. The people who know best, management, theoretically, think that it's undervalued. They are buying, they want to make money because everybody does. So let me track them and follow it. Right? I think that's
Awesome.
something to look out for.
Awesome. Cool. Now, coconuts, hope you learned a few takeaways there. We'll keep this going. We probably will have another macro topic. We'll see how this week goes, and then
Yeah.
we'll take
But
it from there.
I think don't be. I mean, if managing emotions is part of this, right? It's a long process. We all want to accumulate money for the next 10, 20 years. So stay strong, right? And we'll get through this. If
Absolutely.
we enjoy the ride up.